Wanted to share this with you guys as investors, right? People who are looking to invest money with somebody about the things that you have to pay attention to if you're going to be investing in a deal, right? Investing money in a deal. I wrote them down because I waste a lot of paper going over this stuff. I love wasting paper on it, but it makes it a lot easier when I can just show you guys when I'm thinking about investing in a deal, looking at a deal for investments, for anything that we're doing, there's a reason why I'm doing it the way that I do it, right? This isn't a get rich quick. This is create wealth for sure, especially when you're dealing with other people's money and banks and lenders and Fannie Mae, Freddie Mac, life insurance companies, and these brokers, right? There's things that you're going to look for. No, so when I'm looking at anything, I'm looking at number one thing I always look at is location. Now, you got to know when you're investing in a deal anytime, even if you're investing with somebody else, you're going to have to ask someone like me or somebody else that you're dealing with the location. That means so many different things. The location on this particular property was an A plus location. It was a 97% walk score. Perfect location for where it was. Now, there's different things about a location because if you don't know, let's say you look at another deal, like you may look at a deal in the location of a property, maybe great, and one street over, maybe shitty. I've done that. I bought multifamily properties. Like one property was great, and less than 4 blocks away, that property location wasn't as good, and it was a nightmare to manage. Like the team that we had managing it, it was a lot of turnover. It was a lot of headache. It was just a different tenant mix, like legitimately. So when people say location, you got to figure out what that means. Like you can have an A plus location of the property, and it's on the right side of the street, and 2 streets over, it's not in the best location. So you have to know the locations in any deal you're looking at. Like this location, perfect. The properties around it, perfect. The locations down the street, perfect. Like you have to actually know everything that you can about that specific location, right? Next thing you want to be looking at is the owner. Who's the owner? Like this one was actually an institutional owner. It's an institutional real estate company. So they manage assets for all their investors that are pension funds, sovereign funds, endowments, things like that, like over 130 institutional investors. So the company that owns this asset that's coming to market, that owner is a company. It's an institution, right? You got to know who the owners are of these deals. Why? Because these owners and the owners, even of the deals that you're looking at, they all know each other. They're all just kind of siphoning out. It's a wealth machine. They take this money, move it out, and they come back to it later. But you got to know who the owner is. The main reason why you need to know who the owner is because if it's a company, they aren't paying attention. Like that specific property, beautiful property, but it was dead. It's not run by entrepreneurs. It's run by bankers and finance guys. It's different. The management team on the site was doing a great job, but if you're an entrepreneur, you know that there's a customer facing scenario. Like my whole life, even though I've been in the real estate business, my business skills is about customer servicing, handling people, talking to people, being nice to them, giving them a great experience, making them feel comfortable in my business of real estate acquisition and buying properties, right? But when you're an institution or you're a company and you're managing assets or capital for your investors and then you roll into that, you're not worried about that. You're on to the next deal. These guys buy over $1 billion worth of real estate a year, minimum, right? So the owner, you need to know who the owner is because if you know who the owner is and how they run their assets for their investments, then you know that you can go in and say, hey, as an entrepreneur, we can make sure because that was the big thing I noticed. I pulled on the door. I was outside waiting for the broker, and nobody showed up. Nobody knocked on the door. Nobody did anything because there was a code to get in. But some person on the management that saw me out there dressed up, looking nice, waiting for somebody should have been able to come in and say, hey, can we help you? Were you looking to lease? Were you interested in this property? Like there was no communication that way. So it's important to know who the owners are because now you know where the gaps are. And another thing, I wrote this here, this is competition, but it's not competition in the sense that a lot of people think. So the competition in and around this property were other institutional assets, right? Other institutional companies, people who own these. So it was all the same. So when you start having these conversations, you go, who's the owner? Or what's happening down there? Who owns that? And they go, oh, that's this company. Got it. You start realizing that they're going to be delivering pretty much the same level of service as it relates to leasing, your office people, things like that. Everyone in the office was really nice, but the owners weren't paying attention to the assets. Even though they're nice and new, there was still some discrepancy in that. And you got to know who the competition is. But we found out looking at, talking, it's like, hey, the properties that are being built down the street, there's a couple of high rises that are being built, were going to be affordable, right? So there was going to be a discrepancy between the income of the tenants that were going to be coming in. And I'm asking the management people, and I'm like, hey, what is that going to do for this location, this area? That you're going to have you're going to have 4 big properties being built in this environment that is an A++ environment that is offering affordability to there. It's not going to bring in low income people because the income of that area was somewhere around 200,000 plus, but it's still going to have an effect on what's happening as people start to move in, right? That matters. And that was the property we were looking at, was the only market rent, the market rental is called a market rent. The only market rent asset in the whole place. So there was a buffer there, but you need to know who's building this stuff. Who's building them? Why are they building it? Did they get a tax credit? How long is those tax credits? What's going to be the competition? Who's the competition? Would they buy this asset if we were to buy it later, 10 years down the road after they finish developing this? Are they sellers? Things like that. So next, you want to know the expenses. The expenses of your market can change. I learned that years ago when I was in Hawaii, buying deals in Hawaii. Then I jumped and I bought something in Ohio. Expenses were different, right? I'm like, oh, we're going to crush it. Expenses are different. I bought something in Texas. Expenses are different. The taxes are different. Matter of fact, San Diego County's taxes are different from LA's taxes. San Diego County's expenses are different from LA's or Orange County or anything like that. So you have to understand what the expenses are. The capital expenditures on the property are going to be different. All of these things really matter as you start to look at that. Even the price per unit. You may get a cheaper price per unit, maybe 300,000 a door, 400,000 a door in one market, and one market over, as it relates to expenses are concerned about that asset, it may be 500,000 or 600,000 a door, depending on what that is and where you're going. But you got to know that. There's so much to know. So just when people go, yeah, I'm investing in this deal, or I'm investing with this guy, or I'm investing with this syndicator, the syndicator should be able to tell you this, not a spreadsheet, but they should have taken a look at so many properties. One, they already know the properties. Before the broker's call, they use, not because we do it. I look at so many assets, it's not funny. So when a broker calls me, I've probably already seen it. It's already on my list. There's only so many 100+ units that are going to come to market and trade. So you need to know that. And it's all in relation to, once you know the asset, you start to learn the expenses. So the next thing you need to know when you're investing in a deal is the tenants. Who are the tenants? First thing I'm asking is like, who are the tenants? Where do they work? Which is jobs, but jobs are not as important as the tenants themselves. Because I learned this a long time ago, especially when you're in high price markets. The whole world will go, cool, there's a Walmart right across the street. Who cares? The military may be great as a conversation, but that may not be who are your tenants. It may be a type of tenant. Maybe they're professionals. Like in that building, there were more professionals working there, which means there were young 30, 40-year-old professionals. I think he said the range was 35 to 40. That was the average. And they were all professionals. And primarily, the building itself was primarily 1 bedrooms, not a lot of 2 bedrooms, but there were 2 bedrooms because you're not going to have in that area someone with a kid, a husband, a wife, and a kid living in those buildings because it's just not there. So you need to understand, number one, the tenant makes the income of those tenants, right? You need to know, like, hey, these people make 150,000 a year and the rents in this place are $3,000, right? That's like whatever, 30% or less than 30% of where they need to be. So that's important to kind of understand the difference between how much a tenant is, how much they make, who are the tenants, where do they work, where are they coming from, and the makeup of those people. So you can make sure that you have that community built up, but you got to know who they are, right? You can't just tell that by looking at a spreadsheet or rent roll. And if you're investing with somebody that has a team, we need to be able to understand those things. Next, what are the jobs? When you think jobs, you need to be like, who's funding the party? Who's paying for the party here? If everybody works in this area, when somebody says what area, where are the jobs here? They're talking about one big job. It's either medical, it's financial, it's in the finance industry, it's in the medical industry, the healthcare industry. It could be in life sciences, biotech, things like that. It could be in the investment side of things, which is financial. It could be all of those things, but you need to know Who's paying for the party? Like, how are people getting paid and where are they at? And then what are those jobs? Because there's those jobs and then there's the support jobs. You may work in a hospital and be a doctor, but the doctor may not live in that building. It may be the support staff. It may be a bunch of registered nurses, and you might be in a different location that's a little bit further down the street. But again, like I said, location, same area, and that may be the support staff to them. That may be the people who handle the trash, the custodians, all the people, the people who take care of the grounds. There's levels to this thing. And if you aren't willing to play that game, then you won't know what you're talking about when somebody asks. And you got to know this, especially if you're talking to a broker. You're asking the right questions so you get the information you need to know whether it's a right investment for money. Next, what are the rents? You need to know whether the rents are good or bad in that area. Like I said, if people make $120,000 a year, your rents are $3,000. That's what, like 30%, somewhere in there, a little less than 30%. You need to know what the rents are. And like that specific deal, they were like, hey, we can change a couple of things because the building was less than, it was about 10 years old. In my mind, I'm thinking, okay, let's say we spend $15,000 a unit to upgrade some of the non-upgraded units. Will we make, or can we bump rent $75? $50, $100, $25. What can we actually get? Will that push them out? Right? Will $3,000 when in that area, the average rent in that area was closer to about 3,700 to 3,800. So there was a huge gap there. But why did they stop there? Again, like I said, who's the owner? Well, it's an institutional company, so they may not look to push rents. They want to keep the maintenance of their returns for their investors, but you can't do that. We can't do that because we have to pay our investors, right? So we got to get a return. What's going to make people leave? What's going to make people question? You need to know that. Like, what are the rents, not only for the apartments or the properties you're looking at, but people rent houses. What are they renting there? Which leads me to the next thing. Like, what's going to make someone jump ship and leave? Because they can. Every 12 months, they can leave. 10 months, they can leave. They can, hey, 10 months in, I'm putting in my 45-day notice. We're going. And can you get that in? Because I had to ask the management, the guy that was on the management team, how is it looking? Like, what's your turnover time? There's 2 turnover times. Fixing a unit, that could take time. And then the exit time between the time that somebody wants to leave and then the entry time of the new person, right? And he was like, somewhere around maybe about a month. I'm like, okay, cool. So you're looking about a month. It's important to know that because if it takes 2 weeks to turn a unit, not a lot, and in a month for somebody to exit and move in, that 30-day gap, you need to be constantly marketing, which goes right back to location. Is a location good to where you don't have to hammer down on marketing online because you're going to need a dedicated staff person handling your social media with apartment.com and every other thing online that's required to make sure that you don't have this huge gap, which goes back to being an entrepreneur. And last but not least, homes. I had this separated because what are the homes selling for? In that property, I drove around the full location of that area, not downtown, not where it was, because that property was great. There's a bunch of properties there. But I also said, okay, in this zip code, where are the homes? Homes are 1.2 million, 1.5 million around this whole area there, which means what? People want to live there. They're willing to pay more for their homes. So that multifamily property, if you're going to live there, you're living there for the zip code. You're willing to pay a little bit more because you want to be in the environment with the demographic, which is what demo means, the demographic of people who make 200,000-300,000 a year household income. They're entrepreneurs, they're business owners, they're high paid employees, whatever that is. And you live in a place that associates you with that demographic of people, right? How they think, what they do, where they go, all that's important, but it has everything to do with the apartment community that you invest in, right? Because let's say the homes around there only sold for 300,000-400,000, and you're looking at a deal that the rents, because it's a newer asset, are $3,000 a month. You're not going to get that. People in the rental space, it will cost less to rent than to buy a home, but it shouldn't cost the same to rent as the cost of the house. Usually it's a lot less. So that's what I'm looking at. Demographics, like, look, how much are they willing to spend? Like, what is their discretionable income? Starbucks needs to be around. Wholesale, Whole Foods, that was also near this property right down the street. I was like, hey, where does everyone shop when you see them? You see a bunch of Whole Food bags when they come home? Yeah, that's pretty much where everybody is. I bump into a lot of the tenants when I go there to shop too, because the maintenance people are going to be going to the same places as well. It's important to know there's Whole Foods there. Ralph's is also down the street because you need to have different levels of that. You can't go to Whole Foods and walk out with one bag for $200. You have 3 bags like $600. Sometimes you're going to go to Ralph's and your tenants, it needs to have a combination of all of it. But you need to know this. Why? Because you need to talk to people. If you're an investor and you're like, hey, I have money and I want to invest in a deal, don't you think there's some things that if you're talking to somebody who's a syndicator, they need to know? I've looked at hundreds of units already, hundreds of properties, walked thousands of units. I meet with the brokers. I know the top brokers. I know the top owners in the area. I know the competition of other owners in the area, what they're building, what's coming to market, what's being sold, who's a real seller. We have people who we've looked at their deals that they've come to market just to come to market and not sell, and then pull it because they wanted to find value. And then you need to know who that is, who's not a seller, but they'll do that if you're looking to invest in that area, right? Because they'll kill your values, or they'll refinance and then reset the clock and then start offering different things to their tenants. So that way either they leave or they stay, right? What are the expenses in the market you're in? If you're in one city and you look across the way and you go, oh, it's cheaper over there, you need to know what the expenses are. What are the taxes? What are the insurance ramifications going to be when you jump ship? You need to know, right? Like you need to study markets and then study the market inside of the market and then study the market inside of that. Understand all the expenses that go along with investments that you're doing. And next, who are the tenants? Your tenants are your customers. Like if you had a business, you would want to invest in a business that has 200 customers coming in, not one, right? That's why I always tell people, don't just, if you're thinking about investing in a house, buy a house, flip it, sell it. I've done that. But if you're going to invest your long-term money into a deal like with somebody like myself, and we're talking about helping our investors, we're always going to look for multiple tenants. You need to know that and know who they are. And you need to know the jobs and employment in the area, like what's happening, why is it happening that way? What are the rents in your property, the properties next door to yours, the properties down the street? What new rents are going to be coming on the market with new products? And what are some of the older buildings? What are they renting for? Like, what are the people's options? Because people do have options, and you want to be the best option for who you're focused on. And then last but not least, the homes demographics, like who's there? Where are they shopping? Why are they shopping there? What can people buy if they were to buy a home or they were to rent a home? Or if they were to rent an apartment from you, could they just buy a house in the same area? And if they are buying houses, who's doing it? Who's the demographic, right? High income, low income. Is that demographic leaving because you have more low income people moving in? Or is the low income people moving out because more high income people are moving in and they're being pressured out by cost? You need to know that as well. That's a good thing. That's not bad, right? So all of this are the things that you need to know before you invest money in the deal, right? Whether you're investing with a fund manager or a syndicator like myself, I'm constantly looking at deals for data. This is a data game. When you're talking about money and you're investing and you're doing investments, this isn't about, oh, I love the property. There's so much more for you to know. And if you don't have time to play this game, because you can't just do it sitting on, you can't just do it sitting on, just invest your money with somebody else, stick to what you're good at, and then have your money multiply for you. And then make sure like somebody like me is like, hey, look, my goal is to go make money for my investors and me. Our goal is to grow and expand. And these are some of the things, not even all of them. Each one of these have a deeper detail, right? But you got to know this stuff. So sometimes when I do my investor calls, our investor briefings, we go over specific deals because I don't always show the deals I'm looking at because they're on market and I signed a confidentiality agreement to not blast their information out. I'm not supposed to do that. But I go over the details of these things inside of a deal and why a deal is a good deal, why the deal is going to make great sense, and where we need to be offering it. What's the debt? What's all these other things that have everything to do with the deal that makes all of this valuable, right? So like I tell people, if you want to do this yourself, you got to know the stuff. Period. Hands down. It is what it is. You need to know it. Your banker's going to expect that you know it, or whoever your debt person is, they're going to check it. All of these things are valuable. You got to know that before you invest in a deal. It's not just, I'm gonna throw down some money and hope things work out with this guy. Yeah, he needs to have some answers, right? And it's a lot of stuff to know. So I hope this helps you for what you need to be focusing on if you're going to be investing with somebody like me passively. These are the things I focus on. I always know these things. I expect to know them. It's not just get a sheet from a broker about a deal. I go and do the research. We have to find this out as a team to go and get this done, and that's what we do for you. So I wanted to share this information about what it is that you need to know, what you need to know if you're going to be investing in a deal, about a deal. This is the deal stuff. This is all of those things. This is what makes up a deal, right? This is a business about investments. And as you can tell, when we're looking at a deal, we're looking at properties owned by companies, institutional real estate investment firms. Like they're not mom and pop doctors and lawyers where it's going to be some ragtag deal that you're not going to want to invest money in long term. All these deals are long term, like institutional quality deals because they're owned by institutions. They don't do mom and pop stuff. So very important to have a distinction between what you're looking at when you're looking at them and know the difference. All right. So I hope this helps you guys. Like this video, share this video, comment on the video, subscribe to our channel. We definitely like that. If you have comments or anything, leave them in the comments. I read them. We answer them. I love them. But what do you think about this? If you had to go looking for your own deal and you were just looking at a deal and you're like, hey, I got some money, I'm thinking about doing it, and you're looking at multifamily properties in your area, do you know the location like the back of your hand? Do you know the location inside of the location, inside of the location? Could you figure out who the owners are, the competition? What are they doing? Why are they doing it? Do you know the expenses of the market you're looking at as well as the markets around it? Right? Do you know your tenant base, the jobs that are in and around, jobs coming, jobs leaving? Is it a positive job growth, negative job growth, positive migration for people, negative migration, the rents in the area, the homes, and the demographics of the people who currently live there? Is it getting better or is it getting worse? Do you want your money there long term? If you're going to do this by yourself, man, you got to know this stuff. Don't be in and out, man. Don't be that guy. So that guy or gal. So like I said, I hope this helps. Let's see you soon. Let's get after it. And if you have any questions, go to bell-capital.com. And you can schedule a call with us and ask questions about investments, how it works. Can you invest in your IRA? How does it get done? How long is the terms for our stuff? What are our fees? Things like that, as well as you can schedule that call, or you can just register for the site. You can take a look at all that stuff, and we're here to help you with that. So again, bell-capital.com. You can go and check us out, or you can leave us a comment and one of us will get back with you one way, shape, or form. But other than that, you guys have a great night tonight. Let's go.